Hello everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy CPI data day. Looks like it worked out pretty well for us, huh? We'll talk about that and of course some really cool high block capital data. I've got some awesome little extra features I want to kind of highlight with you. But just really quick here, of course, kind of to preface, we can see that we had US core CPI data released here at 8:30 a.m. Eastern Standard Time. And of course the results there is 4.9% instead of 5%. So that being lower is a positive sign. It's better than expected, which is exactly why we saw this spike here at exactly 5:30 a.m. Pacific, 8:30 Eastern. Okay, so really cool stuff there in that regard. It's a very positive sign. It's a fundamental catalyst to kind of push things into high gear, get us through that resistance level. We'll talk about that and much more. Also note too, when it comes to this here as well, with the back end data, we can see there's a lot more activity with whales versus retail. Okay, so a lot more money is being moved around, so to speak, in the last 24 hours. And we can also see a good global bid-ask spread ratio there where it's kind of more positive, if you will. Okay. I'll highlight those things specifically. One thing I want to touch on first before we get started though is that we have a trading competition here through BitGet that just kind of went live here today. A little impromptu. I was hoping to get better heads up on that, but hey, extra money is extra money, right? We got a good $1,000 purse for each person regarding profit and loss ratio as well as volume. Okay, so you just simply click on this link here as a community member and you have a potential prize pool there. Nice healthy profits, of course. So again, I just want you to treat it positively. Try not to overdo it. Obviously, just trade as you regularly would, but this is a benefit to our community members. So if you do not already have BitGet, make sure you use our link in the description below to effectively register for that. You'll be eligible for future competitions. Also, congrats to our community members for a nice little 15% on Ethereum here for a long that we took yesterday. Only took us a day and a half to get that. All right, so what we want to look at here, first of all, is a couple of things. Now, the market's looking pretty decent, obviously. We can see a lot of green across the board, minus the two meme coins here. But for the most part, we got some really cool stuff. So let's take a quick peek here at this CME futures here and just kind of touch on this as well, because this is important to recognize. We do have that gap that I was mentioning previously that could and should be filled eventually, okay? So keep that in mind. The gap is all the way from 29,100 to 29.7. Okay. So this does imply that we could very well see 30,000 in this potential run here. Obviously, there's a lot of things that need to happen first, but that is a potential reality. We want to kind of just understand that is a thing. Okay. We also want to take a quick look at Bitcoin dominance, so we can still see that we are in that resistance zone. So as the price continues higher for Bitcoin, so does the percentage for Bitcoin dominance. We want to be at 49% or higher to see our next bull run from Bitcoin. Okay, now keep in mind alts are going, I would say they're getting hit hard, but they're definitely break even and or just seeing some doji candles here. So for lack of better terms, that's kind of what we're looking at there. Nothing super spectacular. Alts are increasing, yes, but there's a lot of money come back in the market here today. Okay, we can see that reflected on the high block capital. So let's talk about that here in a moment, or for now, right now. Basically, we can see that we have this nice green day here today, obviously. That is followed by some increased volume, which we just saw a moment ago when CPI data was released. Now, what we want to take a quick look at is some buy volume. Now, this is all well and good, but here's a really cool little feature too, and you may not know this, but with high block capital, you can see the awesome different variances here. In other words, from 0 to 100, we can see we kind of have smaller volume there in that sense, but we see the largest amount specifically yesterday from 100,000 to 1,000, okay? Or sorry, 100 to 1,000 essentially, that's in buy volume. Now, keep in mind, there are some whales out there too, and they're not super active just yet, but we are seeing some medium-sized position sizes here today, more specifically at the 10,000 to 100,000 mark, okay? So kind of cool data there as well, and we can see that reflected here on liquidation where we got more longs getting, prevailing, if you will, more shorts getting liquidated. We can also see here as well that the global bid-ask spread ratio is higher. It's not higher today than yesterday, but it's still high, right? And anytime we see this, at least specifically in the past, when we have this global bid-ask spread ratio higher, the price inevitably goes up from there. Okay, so you can kind of see the price action is reflectant on that. Granted, there's a lot of accumulation back here when the price was about 16,000, 17,000. But generally speaking, when the price increases, you'll see the bid-ask spread ratio is higher. In other words, more bids than ask, more people trying to buy than sell. And I think it's a positive sign to see that there as well. We can also see here also that we have a lot more whale activity than retail trader activity. And that is reflected, of course, on the charts with the price action increasing. It's also nice to see whale activity when the price action is giving us a doji candle. As you can see here, we got a doji candle right there, kind of giving us the indication that the price is likely not to go any further down. That gave me indication to want to take that long position from Ethereum and why we're still holding our long position open for Bitcoin. I feel comfortable with that. Again, Different strokes, different folks. Obviously, there's different trading styles out there, but from a swing trader's perspective, we're seeing some bullish signs that on the back end that are very positive. We can also see here that the net longs are closing their long positions right now, and we have almost the same equal amount of shorts closing their position. That gives us a state of indecision, if you will, which kind of is standard when you have these kind of increases going into data release. Okay, so CCI, PPI, those are all different things that kind of factor in. Now, taking a quick look at liquidation, what we want to look at here is some key levels, of course. We can kind of see that with the liquidation levels where they're at, there's a lot of liquidation potential at 28,500 and, of course, a support range at 27.5. So that gives us kind of an indication there, even though we haven't been fully liquidated to either direction, those are areas in which people are opening and closing positions, or positions haven't been completely filled yet, and that is effectively a case in point where we want to pay attention to those levels. So we're tentatively range bound between 27.5 and 28.5. That basically reaffirms the fact that we want to break through 28,500 as that key level resistance to continue up higher. Okay. So we're kind of there at this point. You can see we're trending closer to 28.1, 28.2, but we're coming up close to it. Now, taking a look here, of course, this is some open interest as well. I want to kind of touch on this here, whereas we can see some longs here. We got some late longs in the market right there at about 28,000 even. Now, that's very positive in a lot of ways because it builds that support range at 28,000. Now, when it comes to shorts, we want to see if they are underwater or if they're not. We got some late shorts at 28,100. So it's interesting to see what's going to happen next, but there's a good chance if these late shorts get liquidated, the price will continue further up from there. Okay, so just keep in mind most shorts right now are underwater, whereas a majority of longs, even late longs, are still in the green. Okay, and that's a positive sign. So let's take a quick look at the charts and kind of see what's going on here. Kind of work our way down. So we got our most recent Fibonacci retracement levels. We can see that resistance there at about 28,250. That's the current Fibonacci retracement level of 0.382. Above that is that halfway point that I talk about and emphasize that it's a really important key support or resistance level. Okay, and that's trending right there at about 20,500 or 28,550. Okay, so that does reaffirm that with those liquidation levels at 28.5 and a resistance level there, that could pose a potential problem for us when the price were to continue to try to break through there. But if we get a short squeeze out from the 28,300, it could shoot right straight through that market as well, because a lot of shorts will adjust their shorts and hedge it with longs, and the price continues higher that way. They flip from bearish to bullish, essentially. All right, so what that basically means for us here is that we've got a pretty strong resistance level coming up, right? So the point of contention is going to be 28,500. We get a sound closure above 28.5 today, and just say we can continue to trend positively at that level tomorrow, then I think we're going to be in good shape to see some long positions flourish up to about 30,000. But between now and then, we want to get through this resistance level, so we're not out of the woods yet, but we're definitely getting close, if you will. We're kind of in the shrubs, and we're getting to that free range, right? But we're not there yet. We want to make sure we stay patient and continue to do what we're doing right now. That being said, we have a MACD convergence on the horizon, as I mentioned previously. It's faked us out 2 times in a row. This could be the third fake out. But again, the more often you test that level, the more likely it is to break, because when this comes down and the price goes up, it's a positive sign. Keep in mind, price has been jumping around, so it's not specifically like a bullish or bearish divergence or convergence on the actual MACD itself. But we have a potential for a convergence there on the horizon. Something to pay attention to. So again, some key factors here. Closing above 50 in the RSI and effectively breaking through 28,500 would give us that natural convergence, give us that momentum to try to retest this tentative resistance at 29,500. Then we're off to the races after that. Okay, so pretty cool stuff here in that regard on the daily. Last thing to note is that we are under both moving averages. Coincidentally, this is kind of like the theme for the day. 28,500 is exactly where the 50-day step moving average is hanging out. So again, 28.5 would probably be a good profit target for a long if you have one right now. Just keep that in mind because there's a good chance it might reject off of that, and if it does, we'd establish lower highs, and we could potentially see further downside. Okay, so I don't want to confuse you here. Just because we got some positivity and some momentum here doesn't imply we're just going to break straight through these resistance levels. Does kind of tell us, though, in the back end with a lot more whale activity and more money coming into the market here, that there's a decent chance that we could sustain this price point and continue higher in the relative near future. So I think it's mostly positive, but by no means is it something that's completely bullish, right? We got to be aware of that. So let's take a quick look at this here too. We can kind of see this trend line, if you will, which is establishing lower highs, is no longer continuing, or at least for the moment, right? Now again, this candlestick hasn't closed yet, the 4-hour, nor has the daily, so we got to recognize that this trend line hasn't officially been broken, but it's a positive sign nonetheless that we're trying to break through that. And if we can close above, just say 28,000 even today, I think that would be a good start to get us to potentially break through that 28.5 barrier. Okay, so I think we're looking pretty good there in that sense. Let's go ahead and take a quick peek at the RSI. This is very positive. Again, candlestick hasn't closed yet, but this extra money coming into the market, the money flow increase, is effectively giving us the indication that we should be able to break through this resistance level. Keep in mind, last time we hit this 50 on the RSI, we got rejected hard down to 30 or 25, and that was at the case in point here, where the price action couldn't pass that shelf. That was Sunday evening. I recall that very vividly because the Eastern markets opened and it dumped really hard. That said, we're on the inverse here. We're swinging back up. We also have a MACD convergence here that's showing good strength, and this to me is a very positive sign. This is absolutely something that I like to focus on or pay attention to as a swing trader. So to me, this is why I feel comfortable with our current long position from Bitcoin and Ethereum, that we're going to be able to hit our targets based on this fact here. Granted, it's not fully closed yet. We got, a few minutes left. Technically, okay, this candlestick is almost closed. We got 7 minutes left. But once again, it's the first attempt, right? So you never truly just take the trade based on an initial breakout. You want to make sure that it's actually going to hold. So we're tentatively there, but not officially. Okay, hopefully that makes sense. Furthermore, let's go ahead and take a look at the hourly. We want to identify a few things here, such as the cloud. I'm speculating we're going to be above the cloud now. Okay, we're right at the edge. And this is where it gets interesting. And that's why it's important to close at 20,000 or higher today, because once again, another 5 or 6 hours will naturally be at today's candlestick close. All right, so keep in mind the daily candle. How many hours do we have left on that? We've got 8 hours left until the daily candle is closed. So in 8 hours, we'll see 8 candlesticks essentially. Hypothetically, we close at 28,000, we'll be naturally above the cloud. And that's important. That's what we call confirmation. Confirmation to me is extremely important because you're on the right side of tracks. I mean, tentatively right now, we are. Conversion lines above the baseline. Lagging spans free and clear price action. We're in the green for the most part. We just haven't officially closed above the cloud. And the reason why that's important is because that's just a series of moving averages, and it tells us the momentum has shifted from bearish to bullish. We're almost there. We just need confirmation to ensure that we can close above that level. So again, I'm looking for a closure at 28,000 or higher today to give us that confirmation for further upside. If we cannot close above that, there is potential we'll get rejected here. The price comes back down. You saw it happen recently too, where the price comes up, gets rejected by the cloud, and comes right back down. Okay. Granted, this was a weekend and we had low volume. Traditional markets were not open, but it's still a thing. Okay. So to me, once again, 28,000 or higher would be great today. A closure above 28.5 would be super solid, but I wouldn't believe it until we have at least 24 hours of confirmation above that level. Just note 28.5 is a key level resistance. So that's kind of where we're at here for the moment. We're not going to worry too much about micro data just based on the fact that this is a fundamental catalyst and it can skew the data a little bit. But generally speaking, that's kind of where we're at there. Mostly positive. I feel like we're going to see a trend continue upwards now that we've broken that descending trend for the moment. Just make sure you wait for confirmation and try not to get too hasty and jump in. Dollar cost average wherever possible. That's my thing. I've been DCing every $500 increment down from 30,000 to 27.5. Okay, so just keep in mind, the bottom could be in. I'm hoping we see 25,000. I know that sounds terrible, but I'd like to add to my position at that point. But even if not, at this point, we're looking pretty good here for a potential increase. Quick favor before you go, please help us grow our Twitter. Come on down and join us. We got some awesome technical and fundamental data streaming through there here pretty consistently. Good 20 to 40 tweets a day to keep you abreast. Make sure you enable notifications so you can be aware of that, and just help us like, follow, the whole 9 yards, retweet. We really appreciate it. We also have a Twitter giveaway here too for a new community member. Once every week, we're giving away a free membership there to kind of help you out, because you guys do a lot for us. We greatly appreciate that, and really thankful for having the opportunity to be able to help you too. Thanks again so much. We look forward to working with you. I hope you have a great rest of your day. We'll see you soon.